Hey guys, it is Julie here with TipRanks, and today we're taking a look at 3 stocks with new buy ratings from top analysts. So let's get into it. All right, welcome back everyone. Thank you all so much for being here. First of all, happy Canada Day to all of our viewers from up north. And of course, that means later this week, we also have the 4th of July coming up. So the market is closed on Thursday. Now to celebrate this week, TipRanks is having a 40% off sale. So if you've been considering upgrading to unlock some fantastic research tools, now is a great time to do so. You can head over to the TipRanks website or follow the links in the description down below to take advantage of that sale now. Now in today's video, we're going to take a look at 3 stocks that come in with a strong buy consensus and just recently picked up new buy ratings from 5-star analysts. We found these stocks today using the daily analyst ratings page. Found under the tools menu, here we can see all of the latest stock ratings. To narrow it down, we're looking at just 5-star analysts who have initiated, upgraded, or signed a new buy rating. That gave us our list down below, and then I just narrowed it down to some of the larger market caps. So we're going to take a closer look at 3 of these companies that have recently received a new buy rating, what those companies do, and how Wall Street is weighing in on the stock's future. Just before we get into that, this is your friendly reminder that if you enjoyed today's video, make sure you hit that thumbs up button and that you're subscribed to the channel as well. Let's get right into our 3 stocks. First on the list, we're going to take a look at American Tower. They trade under the ticker AMT and are currently priced at $193 per share. They've had some ups and downs this past year. Overall, they're up 2.5%, in the last 3 months gaining 2%. American Tower is one of the largest real estate investment trusts and is a leading owner and operator of wireless and communications infrastructure. Their assets include wireless and broadcast towers, rooftops, in-building systems, and data centers. Their business model is based on co-location or neutral hosting, which allows them to house multiple wireless communication tenants on a single tower. This allows tenants to reduce their network infrastructure costs and focus on providing services to their customers. Their second quarter earnings report is due out at the end of July and follows an earnings beat for their Q1. For their Q2, analysts are anticipating earnings per share of $1.59. This follows their Q1, where they reported earnings per share of $1.96, beating estimates by 20 cents per share. They also saw their total revenue increase 2.4% to $2.8 billion. They said the strong performance they saw in 2023, underscored by robust demand across their asset platforms, continued into the first quarter. Of course, as a REIT, the company does also pay out a dividend, and their current quarterly dividend sits at $1.62 for a yield of 3.35%. An analyst from Bank of America Securities recently assigned a buy rating to the American Tower stock, citing one of their recent acquisitions. He said that their recent acquisition of CoreSite will strengthen American Tower's position in enterprise colocation services, avoiding the chase for hyperscale opportunities that do not align with their strategic objectives. Additionally, the demand for CoreSite's enterprise colocation services is robust, with growth observed among both traditional and digital enterprise sectors, and the demand is evident in significant markets such as Boston, Chicago, New York, and LA. The stock currently has 12 analyst ratings, coming in as a strong buy with 10 buys and 2 holds, and Bank of America isn't the only one that just recently initiated a rating. Analysts' average price target comes in just shy of $219, implying an upside potential of 12.76%. Down below, we can see that Bank of America rating recently assigned here. We also had Goldman Sachs initiating a rating with an upside of nearly 20%. On the high end, we have a price target from Raymond James with an upside of 28.5%, and our low end price target is a buy rating here from Wells Fargo with an upside of 3.6%. Our second stock to pick up a new buy rating is Intercontinental Exchange. Trading under the ticker ICE or ICE, the stock is currently priced at $137. They've climbed 23% overall in the past year, fairly flat in the last 3 months, down 0.02%. Intercontinental Exchange engages in the management of online marketplaces. ICE owns exchanges for financial and commodity markets, including the New York Stock Exchange. Their clearinghouses provide stability and risk management across global markets, and they also offer fixed income data services, analytics, and platforms to help customers capitalize on opportunities and operate more efficiently. For their first quarter earnings report, earnings per share did come in line with expectations, and the company posted record net revenues. They reported Q1 earnings per share of $1.48, which was in line with expectations. They saw record first quarter net revenue of $2.3 billion, which was up 21% year over year, and record operating income as well of $1.1 billion. Management said that this performance not only reflects the strength of our balanced and diversified business, but also the strategic investments that we've made to drive long-term profitable growth and create value for our stockholders. And they also pay a quarterly dividend at 45 cents per share for a yield of 1.25%. And we just had a 5-star analyst from Goldman Sachs upgrade their rating on the stock to a buy. The analyst anticipates a shift in their earnings per share growth to a higher trajectory, projecting low teens growth by 2025. This shift is underpinned by robust structural tailwinds in the energy sector, where ICE is a global leader, expected to drive substantial revenue growth in the coming years. They also forecast a resurgence in the fixed income data and analytics segment, buoyed by a recovery in annual subscription value with increased inflows into fixed income funds. And with 11 current analyst ratings, the ICE stock does come in as a strong buy with 9 buy ratings and 2 holds. The average price target comes in at $152, implying an upside potential of over 11%. Looking down below, we can see that upgraded rating here from Goldman Sachs with an upside of nearly 22%. We've had several other analysts recently assign buy ratings, and the low end is our hold rating from Morgan Stanley with an upside of 1.45%. If you've made it all the way to our third stock today, then this is your reminder to make sure you hit that thumbs up button. Last but not least on our list is BlackRock. They trade under the ticker BLK, currently priced at about $785 per share. They've climbed over 16% in the past year. In the last 3 months, they've cooled off slightly, down 3.27%. BlackRock is a well-known global investment manager. Founded back in 1988, BlackRock now has $10 trillion in assets under management. They offer investment advisory and risk management services to clients with the goal of helping people achieve financial well-being by making investing more accessible and affordable. They manage assets for a variety of clients, including individuals, institutions, and ETFs. Their second quarter earnings report is coming out in just a couple of weeks on July 19th and does follow an earnings beat for their first quarter. For their Q2, analysts are anticipating earnings per share of $9.94. This follows their Q1, where they reported earnings per share of $9.81, coming in 41 cents ahead of analysts' expectations. And that also increased 24%. The company saw $76 billion of quarterly long-term net inflows and record $10.5 trillion in assets under management. Management said that BlackRock's momentum continues to build with accelerating client activity and line of sight into the funding of significant wealth, institutional, and Aladdin mandates. And once again, we do have a dividend-paying company with a quarterly dividend of $5.01 for a dividend yield of 2.55%. Following that strong quarterly report, we had plenty of analysts reiterating their price targets, including one from Morgan Stanley, who actually increased theirs. They highlighted BlackRock's accelerating momentum with substantial mandates across various client channels and geographies, which is anticipated to bolster organic asset growth and base fee growth in the coming quarters. Their comprehensive capabilities, distribution strength, and leading brand position them well to seize growth opportunities across many areas, and these factors are expected to yield superior earnings for the company. BlackRock is rated a strong buy based on 13 current analysts, breaking down into 11 buys and 2 holds. The average price target comes in at $910, implying an upside potential of 16%. We can see our most recent rating here was just assigned from a 5-star analyst at Jefferies with an upside of over 15%. Our high-end price target does come from Morgan Stanley with an upside of over 30%, and our low end is a hold from JP Morgan with a downside of 3.6%. So that is a quick look at 3 strong buy stocks, all picking up recent buy ratings from 5-star analysts. Let me know your thoughts on these companies in the comments down below. I always love hearing from you guys. And don't forget to head over to TipRanks.com to take advantage of our 4th of July sale right now. Keep in mind these videos are never a suggestion to buy or sell any specific stock, just keeping you up to date with those recent analyst ratings, so make sure you always do your own research and due diligence. Thanks so much for watching. I hope you have a great day, and I'll see you back here next time.